Monday, traders, and welcome to a fresh week in financial markets. Okay, so let's start with US equity markets. US equity markets last week actually had a very positive, very solid week. Didn't start that way though. On Monday, US equities were actually down around about 2.5% before the positivity started. So Tuesday, they wiped out those losses. And then Wednesday, Thursday, Friday, all very positive days. So 4 positive days in a row. And NASDAQ actually almost finished up a whopping 7% for the week. So again, yes, very positive week for US equities. And look, the main reasons for that, look, it's not rocket science. It's obviously Trump and tariffs and more positive headlines that we got last week, especially with respect to China. It seems like he's softening his stance, and potentially the talks are starting with China. So the fact that there was, it seemed like an olive branch from both China and the US to talk with respect to tariffs is what really drove those equities higher. And the other thing is the market is starting to feel that maybe the worst of the tariff headlines are behind us, and that in the future we're probably going to be seeing more positive headlines on tariffs, that maybe potentially some sort of deals are being done. The other thing that market's sort of looking at the moment is global money supply. Global money supply is at record highs. It is growing, so it means that central banks have been, feeding liquidity into the market. That liquidity finds itself, into risk assets, and it's generally bullish for markets. So another thing that obviously has been helping this positivity. Moving on to the bond markets. Bond markets, especially the long end, US 10-year yields and US 30 years, have been creating a lot of stress in the market when they spiked higher. But last week we did actually see the US yields trading lower, and we finished the week for US 10-year yields down towards around about 4.2%. So they're about 40 basis points off their highs when they were stressing the market. And US 30-year yields, they finished at around about 4.7%, so about 30 basis points off the highs when they were stressing markets around 5%. So yes, those bond yields trading lower has also been very positive. That has helped markets, but certainly keep an eye on those. If they obviously continue to trade lower, that's going to continue to help markets. Currency markets have been a little bit of a mess, to be honest. The US dollar really has been tracking what's happened with US equities. So when US equities have been sold, it's been like a sell USA narrative, and the market has sold the US dollar. And conversely, when US equities have rallied, that's actually been a positive for the US dollar. So US dollar index last week had a good week, followed US equities. So we did have the dollar index break below 100, which we've been talking about. It's been a big technical level, big psychological level. We traded down towards about 98, but we're back up towards 100. So potentially, look, that could be a false break. I'd suggest maybe not selling dollar index sub 100. Until we do get a firm direction for the US dollar, but at the moment it seems as if we are trading in a choppy market with the US dollar, with a bias if this equity market continues to be long USD. Okay, so moving on to gold. Obviously, gold's been super volatile. It's probably been the most volatile market last week. We're seeing $100 ranges in gold. One of the headlines we just saw at the open of Asia is that Trump believes that there's a potential deal on the table now. He's confident that between Russia and Ukraine to basically finish the war. It's something that he desperately wants. His first 100 days of being in office are coming up. He wants to do that before then. He obviously did meet Zelensky at the Pope's funeral in Rome on the weekend. But look, one of the reasons gold's rallied on lots of different reasons, but obviously being a safe haven, there's been a war premium built in for gold. So certainly if we do see a ceasefire but an actual end to the war between Russia and Ukraine, that could weigh on gold. So I'd be very careful at the moment trading gold. But look, the range at the moment, it seems as if it's around about, say, 32.60, 30 to 33.60 is probably the 100-point range where gold's trading in at the moment. So good resistance at the top side, and on the bottom side, obviously good support. A break of either of those levels is probably going to give us the next directional move. So keep an eye out on those two levels. Okay, this week there is a little bit going on in markets. One of the things for US equities first is that we still are in quarter one corporate earnings season. We've got some of the biggest names reporting earnings this week. We do have Microsoft, we've got Meta, we've got Amazon, and we've got Apple. All of these companies are companies that certainly can move markets and move the NASDAQ. So if you're trading NASDAQ, I'd certainly keep an eye on how those earnings are released. Moving along, we do have on Wednesday, we have quarterly CPI. So first quarter CPI for Australia here locally. Markets pricing in rate cuts for the RBA starting in May next month. So certainly that quarterly one CPI number does have to behave itself and come in on expectations. Do not need that number to come out above expectations. If it does, then maybe the market has to start rethinking those rate cuts, because they are starting to price in aggressive rate cuts, at least 3, and some banks such as National Australia Bank actually forecasting maybe as much as 5 rate cuts by the RBA. So yes, that quarter one CPI will be very, very well watched, well traded, and yes, keep an eye on that if you are trading Aussie dollar and also the ASX. Also got some quarter one GDP coming out in the US that same night. Looks as if GDP in the US is going to be coming down in a big way. So we'll see how the market reacts to that. And then on Thursday, we do have a Bank of Japan meeting. They should keep their policy rate at 0.5%, 0.5%. This meeting would have been live, as in the Bank of Japan may have considered actually raising rates at this meeting if it wasn't for what was going on with tariffs and all this market uncertainty, instability, volatility. So look, they will probably sit on the sidelines again, but there could be some hawkish comments from the BOJ, just preparing for the inevitable rate hikes that will come, and they are the only central bank globally that will be hiking rates. So certainly this Bank of Japan meeting on Thursday is going to be important. And then we finish the week with non-farm payrolls, which is employment data out of the US, which is one of the most important data prints that we get. So look, a lot happening this week. Good luck. We will check back in with you shortly.